J-Pal was the Grinch that stole Christmas, but is all hope lost? Or can we rally into year end? We still have a couple days left in 2024, and we're here to talk about if this market can continue to press higher as we head into January of 2025. My name is Blake Morrow, and you are listening to the Week Ahead video. Thank you guys for listening. It is, it is Christmas week this week, and next week is going to be New Year's. This is not going to be like our normal Week Ahead video where we go through each individual event and we talk about all the individual currencies and indices, but I am going to cover a lot today. And also Nick from Trading Analytix will be here as well to wish you a Happy New Year, but also he's going to be covering the Mag 7 and a couple other indices. So make sure you all stick around. I want to get into some of the charts and what's happening this next week. Next week, like I said, it is going to be a New Year's, it's going to be New Year's holiday. Therefore, we will not be broadcasting our normal free shows on Tuesday, the 31st, and then Wednesday, the 1st. So those 2 days we will not be broadcasting our normal free shows. And then our flow show, which is our European show, isn't even going to be broadcasting till January 6th. So I just want to let you all know that, a little bit of housekeeping before we get started. It is Friday, so the markets are moving, and as you can see, the dollar is continuing. And we talked about this last week, about how the dollar would continue to be strong, and some of the commodity currencies like the Aussie and the Kiwi continue to be weak, and even the Canadian currency continues to be weak. But you can see the euro dollar has just been kind of bouncing around. Let me get rid of myself here and take myself off of this video, and I'm going to re-emerge a little bit later. But what you're going to notice here is the Aussie dollar continues to trade very heavy. We're right down at our lows. Now, it would make sense to me, at least, when you're talking about what's happening in currencies, that we're going to eventually, in the Aussie dollar, take out these lows, especially because the stock market has been under pressure this week. We've seen equities come off. We talked about that last week, and I want to just, like I said, I'm going to mention a few markets here, but we talked about the S&P selling off but rallying back to the underside of this ascending wedge. We basically did that this week, and we've reversed. Now, you'll notice that the 50 DMA is continuing to support the S&P. I still think there is a risk that we push back above 6,000 the last couple of days. Remember, Monday and Tuesday, there's 2 days that the market's open going into the end of the year, and there still are asset managers that have to chase the market. So I wouldn't be surprised if we go up and challenge those levels around the 6,000 level, but hitting all-time highs between now and Inauguration Day, we'll see. I'd like to see how this market does develop. I would say that right now, whoops, let me fix that. The 5,800 level is obviously very critical level of support for the S&P. Right now, 6,000 is resistance. And as you can see, those are the levels that I think we should be following as traders. Break back above this week's high, which is around 60.30, 60.40, might take us to new all-time highs. But just notice how divergent the relative strength is. So even if we hit new highs in the S&P, which is entirely possible next week, there's a good chance that as we hit new highs in stocks, relative strength is still going to be very divergent. So that means you want to sell into a rally at some point, especially if we're challenging upside channel resistance near 60, I guess that's around 6,300 or so, 6,200. That's entirely possible. I'm not banking on it personally, but those are the levels that I'll be looking at in the days ahead. Now, I do want to talk a little bit about currencies, and you can see the euro. Now, the euro actually has a really critical, in my opinion, a very critical trend line that we tested today. And this is Friday, December 27th, and you'll see that trend line is being tested right here. Now, if you expand that past, you'll notice that this is previous support, current resistance. So that means a break above 104.55. That's the level I'm looking at, 104.55. A break above that, you might see some dollar weakness come through. Now, the dollar, we talked about this last week. We expected some dollar strength for year-end flows. And, after reading all the bank analysis on year-end flows, most of them, obviously realize that this is a holiday week. So they've been pushing some of those flows throughout, for the end of year, throughout this week, probably through last week. That's one of the things, in my opinion, that's kept the euro under pressure. if those end of year dollar buying flows dry up by Monday or Tuesday, we could very easily, going into the second half of next week after the first, we could end up getting a recovery in the euro back up towards 105.25, maybe even as high as 106. So keep your eye on the euro. The thing is it's holding up pretty well, but if we get above this trend line, that's going to be a more of a bullish type of breakout. Also, take a look at sterling. Sterling tested 125 this week a couple of different times. We're holding up. What I would be looking for at this point is 106.20, which is right here. If we break above 106.20, right there, that could be a do or die level for the market next week. So if we break above 106.20, you might see a recovery in the sterling back up towards the 50 DMA, which is about 127.50. That's something that I'll be looking at, obviously, going into next week. We also talked about the Aussie. Aussie continues to trade really heavy. We're testing these lows. The way the Aussie is trading, I would suspect that it hits one more fresh low just to stop out anybody who's trying to get long down here. So we might get a move down towards the 61.60, 61.50 level channel support. So one last push lower, I would expect. Find some buyers before the Aussie gets a little bit of recovery. Same thing with the Kiwi. The Kiwi is trading real heavy here. And we talked about how heavy it was trading last week. It continues to trade very heavy. It's hard to get out of its own way. Now, with the Kiwi, we may end up ended up having a throw over, which in this case would be a throw under. And so if we do get some sort of recovery, a break back above 56.75, this would actually be a bullish event. But like the Aussie, it's trading so heavy, I would expect it to trade at least one more fresh low before we start to see a recovery. One of the other things, and you can see it in the Forex Analytics community. I'm going to take you over to the community right here, where that actually Nick was putting in a chart of Apple, which I bet you he's going to be referencing this chart in the video in a very short period of time. What you'll notice here is if you go over to the news and research room, you'll see the DSI, the Daily Sentiment Index. Whoops, I didn't mean to do that. Let me refresh that. I hit something on accident. Here we go. If you look at the Daily Sentiment Index of the Aussie and the Kiwi, they're both pretty extended. They're at 14, 15, which is pretty, how should I say, extreme. So there's risk that those could bounce a little bit more. Now, if you guys want to know how to get inside of the Forex Analytics community and ask questions like Sarab has asked to me, which I haven't answered since that was actually just asked a few minutes ago, 6 minutes ago to be precise, which I will address it after I've finished filming this video. If you want to be able to talk to myself and other traders in the Forex Analytics community and talk about different market dynamics, make sure you check out Forex Analytics. We have our annual pricing special that's good for the New Year's. And it's 40% off semi-annual subscriptions. We've never, ever done that. We've only had 30% off semi-annual subscriptions in the last 8 years. So this is the biggest discount we've ever given on a semi-annual subscription. Plus you can buy 1 month, get 1 month free, which that makes your price for 2 months $75 a month, which it's $2 a day. $2 a day for the next 2 months to have access to myself, other Forex Analytics team members, private shows, the Forex Analytics app with all of these wonderful tools, whether you're talking about different analysis in different currencies, or you're talking about the live squawk feed, which happens to be down until after the 1st of January. Live squawk feed, risk management tools, all sorts of things inside of here. So make sure you get involved in the Forex Analytics community. But like I was talking about, we've been discussing this whole week that the Kiwi dollar seems like it's going to be, Kiwi, Aussie continue to be under pressure. The dollar Canadian continues to brush up with not all time, but new highs here. And, we're stretching towards levels we have not seen since, way back here in 2020. This is during the COVID lockdown era. So Remember, there's political turmoil in Canada, so it does seem like that we are going to trade up towards 146, 147 before Trudeau is kicked out of office sometime in January. That would be the thought process, and that's what it seems like is going to happen. Continuing on with currencies, one thing about we discussed a little bit about the dollar yen last week, about how it was in breakout territory, or was trying to be in breakout territory. We hit a fresh high this week, but notice, and I'm going to point this out right here, notice that we hit a fresh high in price, but relative strength diverged. So one of the big drivers in the dollar yen is going to be what's happening in yields. So if you take a look at what's happening in the 10-year yield, and let me go find that for you. Here's the 10-year yield. We are challenging the underside of a broken channel. Now, we're also at 127% extension that you'll notice is right there. And with that being said, being that we're at the underside of this channel, 127% extension, and also you'll notice that we have divergent relative strength once again. If yields start to come down, that's something that could weigh on the US dollar Japanese yen moving forward. Now, what I'm going to do right now is I'm going to pass it over to Nick from the Trading Analytics team. He's going to talk a little bit about some indices, Mag 7, wish you a happy new year. So Nick, take it away.
Hello everybody, this is Nick Groves. Thanks for having me, Blake. Let me go ahead and just walk through the big three indices. I'll also cover Apple and NVIDIA. You can see here, after the Christmas rally, we're coming off a bit today, down 1.3%. We did come down and tag the 50% retracement in the S&P. We're going to probably want to see that hold. There's a few different ways I'm looking at the equity market right now, but I am long. If you're in the Forex Analytix community, you'll see that. I'm still holding on. It took a little bit off after Christmas, but I do think that this rally could continue. When you're looking at the S&P spot, you can see that we pretty much just came down and bounced right off support, a little bit of a false breakdown. So I do think there is a possibility that we could move higher. The NASDAQ did actually bounce off the trend line here. You can see on the 2-hour, this formation is ringing true at the moment. We had a little bit of a false breakout and a false breakdown, but you can just see that we're back in this range, and this support here at 21,513 is going to be pretty important support to line up. Let's also talk a little bit about the Dow. It is a little more concerning than the rest. You can see it's broken down. Maybe this trend line should be drawn like this. It seems to be holding below this. So the Dow does look like it could continue down in the event that it holds these highs here at 43,682. But overall, I'm still feeling a little bit optimistic about this market. Taking a look at NVIDIA really quick. We talked about this the other week. It started to break down from this head and shoulders pattern, but I did feel as if it was a little bit of a false move. You can see this green zone here, a buy zone, around 128. We've seemingly gotten back above the neckline, and I don't know if this is going to play out because this right shoulder here is about to expire, in my opinion, and also a move above 140 would infer that we're going to see further upside in NVIDIA. And if you're looking at the semis, the SMH index, you can see we're kind of close to nudging up against some resistance at 252. If we break above 252, I do expect NVIDIA to run higher. Then I'll leave you guys with Apple as well. Apple, a little bit concerning, seemingly having a evening star formation at the highs. You can see it also came up really close to this 161% extension. So it looks like Apple might want to come off a bit. And the Mag 7 have certainly been holding up this market. I'd be looking to be a buyer closer to 244 in the event it gets down there, but really this 237 to 240 level is really appetizing. That's where I'd preferably like to get long in the event we get down there. But I'll go ahead and pass it on back to Blake. Hope you all have such a great weekend, and I'll talk to you soon. Cheers.
All right, the last couple of things, and oh, by the way, I should say thank you, Nick, and Happy New Year to you as well. One of the couple other things that I did want to cover really fast before I let you go for the New Year week is I did want to talk about crypto. I want to talk about Bitcoin. Bitcoin's been really struggling now. Now we're starting to get to a point. Whoops, I want to go back to Bitcoin. We're starting to get a point in Bitcoin where anybody who chased the market higher above 100,000, they're probably looking for exits near 100,000. So you'll notice that the 100,000 level is now starting to offer some pretty good resistance. And what I'd be looking at is this 90 it's about 91,000, 92,000. We start breaking below that, you're probably going to see a more significant breakdown, which, you know, the breakdown would probably just lead us to better levels to be a buyer. You know, and that would be, let me get rid of some of these things here. That'd probably take us towards 85,000, maybe even as low as 78,000. And obviously, if we get anywhere near the 75 to 78,000, this is going to be where a lot of buyers, myself included, are going to try to step in and pick it up for a bounce. So if Bitcoin does by chance come under pressure going into next week or maybe the next couple of weeks as the Trump administration, you know, is back in the United States and back in office, I'd be looking for any type of pullback below 80,000 is probably going to be bringing some opportunities. One of the other things that I do want to mention as we go into look into 2025 is that volatility, as you can see, is picking up, and I think we're picking up volatility, generally speaking, a little bit more. Now that's great for traders. You know, one of the benefits of being involved in Forex Analytics is being with a bunch of traders, myself included, or the rest of the Forex Analytics staff, amongst several awesome traders that are, you know, constantly putting in, you know, what they're buying, what they're selling, you know, what positions they're taking on, what positions they're taking off, what positions they have running. Like myself, you can see what my open positions are. It's great being in a community like this to be able to bounce ideas off of other traders in the markets and get their feedback. So with volatility as perched up as it is, and I think it's going to be elevated throughout 2025. I think that elevation in volatility is going to be good for the trading environment. So if I'm bullish on anything, it's trading into 2025. So guys, gals, I just want to say, if you like these videos and you think they're instrumental to you in you know, getting prepared for your next week, make sure you give me a thumbs up. Subscribe to the channel below, and actually give thumbs up to the team here at Forex Analytics to make sure that these videos get put out on social media for you, so you can watch them throughout the course of the weekend. And I want to say, for those of you that have been with us all year, or if those of you that are new, Happy New Year. Thanks for hanging out with us, and thanks for, you know, making our lives great in 2025 or in 2024. And I'm really looking forward to trading with you in 2025. We got a lot happening here at Forex Analytics. We're going to be adding team members. There's going to be a lot of functionality added to the Forex Analytics platform. A lot of changes coming. So make sure you subscribe to our newsletter. You can go right to our website. You can go to our website and go to the blog page. Or you can go all the way, I believe, at the very bottom. You can sign up for our weekly newsletter right here. Put your name, email address. You'll be notified when there are changes that are coming, which there's a lot. Or you can go over to our blog and do that as well. It's all free to do so. And take advantage of this wonderful pricing for the new year. We don't only have discounts on Forex Analytics, but also for all trading accounts up till January 1st. So that means next week, you're going to be able to get 30% off all assessments, whether you're talking about new assessments or reassessments. So make sure you take advantage of that. All right, guys and gals, my name is Blake Morrow with Forex Analytics. Happy New Year, and I will see you next week, and I will make sure I get you a really great video with a lot of great setups. So have a good one, and we'll talk to you soon. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.